President Trump commenting and saying that interest rates should be lowered. Does he have a point?
Well, it's not up to him, quite frankly, and it really comes down to what the central bank's mandate is, and primarily that is to keep a lid on inflation and look after growth and unemployment. Inflation clearly remains a problem. We've seen it once again here, and the US economy is in a relatively strong position. So certainly if one side of the coin is already taken care of, they're going to have to focus on the other side of it, and that is inflation. And until we see signs that it is likely going to go back down towards that 2% target, I think the Federal Reserve are going to have to remain patient, which unfortunately means higher interest rates and higher borrowing costs look to be here for the time being.
Well, you say what happens at the Fed is not up to President Trump, but given these comments, how much interference can we expect, do you think, and what goes on there, and what does that mean for the way it does things?
Well, look, we've already seen questions just today on whether Jerome Powell will step down if Donald Trump asks him to, and he said that he wouldn't resign. So certainly there's previous when it comes to trying to influence the decision making of the FOMC. And they will be aware of it, but that being said, it's quite obvious what the lay of the land is right now. Inflation is a problem. The last half a year has seen month-on-month inflation rise and rise and rise. Now we're at 0.5. We thought last month's reading of 0.4 for the month was going to be the peak, and today was going to see it come back heavily. Instead, we've just seen it continue to climb. So there just isn't the basis here for the Federal Reserve to cut rates in the coming months, and instead markets are now continuing to push back those expectations on when we're going to see the first rate cut.
Well, let's talk about those inflation figures then. As you say, rising and rising. What's behind that? What's going on?
Yeah, I mean, it's pretty concerning. I mean, first and foremost, we're seeing a resurgence in terms of services inflation, which is a problem because we had been seeing that come down, and that was pretty encouraging. We also saw a move higher in terms of monthly shelter costs. Shelter costs have been a massive problem, and it looked like we'd finally been sort of keeping a lid on that and driving it down. So around about a third of the inflation metric comes down to shelter. Well, that moved upwards for the month-on-month metric. We also saw fuel costs, despite the downside we saw in terms of crude oil over the course of January. We saw fuel costs moving towards the upside, and used cars, once again, a problematic issue. Another strong reading from that area of the US economy when it comes to the inflation front. So problematic across a number of different points here.
Well, you mentioned Jerome Powell, the head of the US Fed. He's speaking again in front of Congress for a second day. And there's already been quite a lot to talk about in this first session since Trump became president again.
Yeah, of course. And I mean, look, ultimately the theme is quite predictable because the Federal Reserve has a lot of uncertainty ahead of it. And, you know, we're used to talking about this data-dependent approach from central banks. Well, that is particularly important at a time where they don't necessarily have complete clarity over what the trade relationships will be between the US and other nations when it comes to tariffs, what the fiscal policy is going to look like, the borrowing outlook is going to look like, what growth is going to look like, how inflation will be. So why would they start to make major decisions now on just guesses of what things will turn out to be? So they're going to be patient, especially with the fact that inflation's on the rise, and they're essentially just going to put the ball into Trump's court and say, you can do what you're going to do, and we're just going to have to react when we see the data.
Let's talk about tariffs. We've talked about them a lot already on the programme, but what do they mean for investors, do you think? How concerned should they be?
Yeah, I mean, anyone that was trading and following financial markets during the previous presidency of Donald Trump will know that it just feels like a merry-go-round where one day you check the markets and they're down because Trump's warned of a massive tariff on a country and like the likes of China. The next day you might see him saying, well, actually, I don't want to impose those, and we're going to speak to Xi Jinping and try and work through it. So it's like up and down and up and down. And the fact of the matter is that there are major consequences when it comes to the growth outlook. There's major consequences when it comes to inflation. So people are trying to gauge what the outlook is going forward. And it's very difficult to judge what that will be when you don't know what all of these trade relationships will be like, and you don't know what the reaction will be from the other countries, because they might then impose similar measures in return on the US, and it might just continue to heighten rather than finding an agreement.
Well, all of that being factored in, no doubt, by the head of the US Fed, Jerome Powell. If he does end up stepping down from his position, who or what kind of person might we see taking his place?
Well, it's a difficult one, but ultimately you're going to look at this more of the same from Donald Trump, and that is that he has, in his second time in office, always tried to appoint people that are receptive to his view and essentially take the exact line that he takes. So we saw it previously when he's sort of bringing people in to his cabinet that perhaps in the first stint were pushing back against him. That's why a number of people resigned. But this time around, it feels like they're all pushing in the same direction. He would most likely try and bring someone in that would look to bring down interest rates. But it might be quite hard for finding someone right now that is an ardent sort of central banker or someone in that kind of strength of position as an economist that thinks that right now they need to cut interest rates because the economy is doing well, but inflation certainly is proving to be sticky and problematic.
Joshua, great to talk to you. Thank you so much for being on the programme. That's Joshua Mahony from Scope Markets.